Alright, what's up folks? It is December 19th, so let's do the damn thing here. Jump into the Sunday watch list, and we'll start with a look at the S&P 500, QQQ, so we'll go through the indexes, jump sector to sector, show you a few charts I think look interesting, and pretty much the game plan here heading into next week. So last week we had the trio. You had quarterly expiration, you had quarterly rebalancing, and of course the final Fed meeting of the year. And still the market doesn't really do a damn thing. So we're in a daily squeeze, and we're just going +1, -1. So it's a lot of back and forth, and don't get me wrong, it's a lot of back and forth. If you look at it on a 15-minute chart, you get these big rips, you get these big flushes here. Not going anywhere, though. So the bulls and the bears, neither one really has conviction right now. We can't even make bigger than an average true range move to the upside, nor can we make bigger than an average true range move to the downside. So we're just pretty much chopping ourselves silly here. But in terms of structure, it is bullish. Stacked DMAs on the weekly, the daily, positive histogram. So it's pretty much your daily squeeze, daily squeezing. +1 to -1 is the buildup of energy, and then around the corner should be the release of energy. In an uptrend, until the uptrend breaks, I lean towards thinking that fires to the upside. So a lot of back and forth, yet we go nowhere. For the QQQ, a little bit sloppier here than the S&P. It's the same thing though. Right? So you're popping, you're dropping, a whole bunch of back and forth shit, and come Friday, we're still within +1, -1 of the 21 EMA. So we're very much in the build-up of energy phase. Now if you look at a weekly chart, and this goes to the S&P 500 as well, your weekly chart here is still super bullish. So you're above the 21 EMA, there's a squeeze, and there's stacked DMAs and green 10X bars. So it's a sloppier daily chart, but it's all taking place in a really bullish weekly trend. And the same kind of goes to the S&P, right? I think definitely a better looking daily chart, at least as of right now. But that weekly's looking pretty bullish. So you get the big catalyst out of the way last week with the Fed, the quarter balancing, all that crap. Now the big question is, can this market finally deliver the Santa Claus rally? So we shall see. I'm still pretty much positioned for it. But we'll move on here to the always exciting Dow Jones, which was pretty exciting last week. Right? Whole bunch of excitement here between +1 and -1. Total chop fest, but it's a pretty good structure. With a positive histogram in your daily squeeze, stacked DMAs on your daily and your weekly. So last week you pretty much had the recipe for a lot of back and forth, a lot of intraday volatility that just kind of results in a lot of back and forth sideways price action. So in other words, at least the way I look at it, is last week daily squeezes, daily squeezed. Pretty much keep it as simple as that. You try to read into it too much, the head can get a little bit noisy. And then your small caps, the small craps, I should say, still really lacking structure here. So the only thing I think they have going for them right now is you do have the shift in your histogram. So maybe they're trying to put in a bottom here. I would say this week, keep a really close eye on the IWM. If the crap can bounce, then pretty much everything else should as well. But this has kind of been the infection, so to say, to the market, where your Qs are trying to hold structure. Then there's things like healthcare ripping, there's things like the home builders looking bullish. It's the small caps, at least as of right now, are one of the major issues. So with the shift of momentum to the histogram, if these bad boys could just trade back above the 21 EMA, I think you see the market really start to take off. Otherwise, it kind of continues to be a problem spot, and it might kind of be the first one to go here before everything else starts getting a little bit sloppy. So I think the mission here, if you're bullish, for the small caps this week, bullish on the overall market, don't trade this. But if you're bullish on the overall market, a good strong bounce in your small caps, probably good for the overall market. So if the crap gets going, pretty much everything else should follow suit. Not the best looking chart though, so there's a lot of cleanup to be done there. And then last but not least, we already looked at the Dow. So exciting we had to come back and look at it twice. So all in all, you had the Fed, so you had Powell coming out, and you got the selling pressure into the Fed. Then everything just kind of rips silly. I think after the Fed announcement, AMD's up like 8%. And then AMD's down 4% the next day. So pretty much here, I think is a simple recap of last week's price action. Daily squeezes, daily squeezing. It's just a lot of meaningless BS inside of +1, -1. So, this to me is like the importance of the Keltner channels. We can't even make a bigger than average move to the upside or to the downside. So, to me, that's not really conviction from either party here. But now let's go sector to sector. Start off with the financials. I don't see too much edge here in the daily charts of the financials. Outside of Schwab, maybe. Schwab definitely looks the best here. But a Goldman leaves a little bit to be desired. Bank of America, JP Morgan. So they're not the best looking daily charts. What could be appealing here for the financials, I think, at least as of right now, is the weekly chart. And we're just seeing this in a lot of different spots in the market. Everything kind of pulled back at the same time to the weekly 21. And now what's missing is the bullish daily chart on top of weekly support. So go look back over here, you pull back to the weekly 21, but then you print a good looking daily chart and she gets to popping. So maybe into, January, it starts to build a better daily chart. Then maybe the weekly trend continues. So it's a bullish weekly chart. You look at a Goldman here, right? They all look pretty sharp on the weekly. They just lack a good looking daily. So I don't see too much edge there for a short term swing. Maybe something out to January, February. Next up is energy. It's just chop. It's a big push, big chop. There's no green 10x bars, there's no stacked DMAs, there's no weekly squeeze. Not too much edge. I don't really see too much edge there. Next up is healthcare. The favorite, right? Definitely one of the favorites last week for the big money. So healthcare fires a daily squeeze. There's stacked DMAs and green 10x bars everywhere. I'm not going to buy it up here at 2 ATR, but if it did pull back, I might be interested. So you got UNH here, which I do believe is the biggest holding in healthcare. Pretty much a mirror image. So there might be a little bit of leadership. I think you look to buy a dip, though. I wouldn't really chase it. So should we get a dip here to healthcare, I'm going to at least come on in here and take a peek. Semiconductors next up, SMH, +1, -1. So you still have stacked DMAs, you still got some green 10x bars. Again, it's just a matter of pretty clearly we're in the buildup of energy. At what point do we release the energy? And I tend to think the energy gets released towards the direction of the overall trend, the direction of the move that brought you into the squeeze. But we'll have to see here. So we'll see if we can get the histogram to start to shift back above the 21, but there's still some really good looking setups in the semis. I think the best looking one here is probably Qualcomm. Printed a bunch of buy signals. What else is there? There's Micron. And Micron has earnings, so I don't really need that headache, but it's a great looking chart. Then there's AMD, who is just +1, -1. But you like to see that back above the 21. Get rid of that negative histogram. And same thing here for NVIDIA. So I think collectively the semis do continue to look pretty good. It's really just a matter of, does the S&P 500 fire the squeeze to the upside? And at that point, are the semis going to be a part of that move? So I'm still interested there on the semiconductors. Next up is utilities. Right? Fire in a daily squeeze, so I think you wait for a pullback there. And then we have got the industrials. I don't really see too much edge here. And then you got technology XLK. There I see a lot of edge. So we're printing a buy signal here. Got weekly, daily stacked DMAs, weekly, daily green 10x bars, and a squeeze. So if you look at the top holdings here in XLK, it's the Apple show. Apple's pretty much the only thing that matters here. It's a general statement. Apple and Microsoft make up 40%. A whopping 40% of XLK. So if you look at Microsoft's chart, it's got a little bit of cleanup to do. If you look at Apple, though, Apple here, that's a nice pull back to the buy zone. So I'm getting an early buy signal here, weekly and daily stacked DMAs and green 10x bars, and you already know this is basically your leader. So part of the pressure, the selling pressure in tech last week, could pretty much just be due to the fact that the big fella here pulls back to the 21. If the market holds up, though, I'm definitely going to look to trade some Apple. So what I'm pricing out here is a January 21st expiration, 170, 165 put credit spread. If you can grab that for $2 a credit, say you do 10 contracts, max loss of 3,000, max profit of 2,000, but say your stop here, is a close at 160. Well, now the question is in terms of, making the numbers work in our favor. If we can make 2,000, and our line in the sand's kind of down there at 160, do we lose less than 2,000 at 160? You're trying to work better than a 1-to-1 risk-reward ratio. So if you throw it on the Analyze tab here and take it out to December 31st, if we're getting a move down into 160, we're down about $1,400, $1,500 on a trade where we could make 2,000. So I'd prefer the loss at that point be a little bit closer to 1K, but pretty good. Still pretty good. We can make more than we might lose. That's the math we're looking for. So I think in terms of sectors here, XLK is interesting mainly because of Apple. Healthcare is interesting. I would probably look to buy a dip. And I'm going to continue to watch a squeeze here in the semiconductors. I do think if you're bullish, the easy trade might just be getting along the S&P 500. So we'll see. In terms of the Santa rally here, I think, one question I have at least is if we get the Santa Claus rally, does it bring everything with it? So is it going to be one of those moves higher where you could get long financials, healthcare, energy, industrials, technology, semiconductors, and make out just fine? Or is it going to be a little bit more narrow? Or maybe, just for example, it's just healthcare utilities. Well, tech and semis go nowhere, financials go nowhere. We'll see. All I know is I'm going to focus on the good-looking structure out there, and that typically should lead us to typically will lead us on the right path. So, with all that being said, in terms of open positions on our end, got a little bit of January expiration AMD, put credit spreads. So I would like to see AMD back above the 21. I've still got January expiration, put credit spreads here on Amazon. The daily squeeze has definitely got a little bit of work to do. 3-day looks good. And the weekly, I think, continues to look good as well. So we're still long some Amazon here for January. We got a couple of put credit spreads on the QQQs. And then we got some roadblocks here. Which, quite frankly, there's definitely better looking setups out there. So in my mastery, we jump ship, on the flush here. It's just not the same setup, right? You jump in because you have a daily squeeze, you stack DMAs and green 10x bars. So maybe you hold support here. It's not the same bullish setup that it once was. So as we are heading into the end of the year here, I'm trying to be a little bit picky about what I hold on to. Because, for example, and that's what we're rocking with here for open positions right now. But for example, I'll show you a few scan results here before I let you go. I want to focus on things that have my buy signal. Well, Qualcomm has my buy signal, which pretty much just means, your weekly and your daily charts, they're in an uptrend, they have bullish momentum, they have a bullish, structure to them, they're trading at the 21, they got squeezes. So if I think the market's going to rally, into the end of December, into January. So if we get the Santa Claus rally, ideally you're trying to, as the market rallies higher, you're trying to get your capital into the best looking setups out there, not the crappy setups, where roadblocks, maybe you get a big bounce here off of support. For me, I'm just trying to keep it simple. I'm not getting my buy signal. So maybe there's something else out there where we do have the buy signal. So there's Qualcomm, which I think is a great looking setup here. And then there's Ford. So here's something I'm thinking about doing in the options room and my mastery on Ford. Daily squeeze, a bunch of buy signals. Holds up really well during last week's shit show. And you have weekly daily stack DMAs, green 10x bars. So I think it's a high probability setup, right? Probably call it, at least in my experience, to trade things like this, you probably got like a 70% chance this trades higher. So now the question is, right, if we come in here and we do a January 21st expiration, 20 by 17 put credit spread, and we're getting $1 a credit here, let's take a look at that. January 21st, sell the 20 put, let's buy the $17 a credit. So it's about a 2-to-1 risk-reward ratio. But I don't want to lose the $2,000. So if I lose the $2,000, just think of the math here. Now I got to win 2 trades in a row just to get back to break even. Ideally, I want to pretty much figure out where's my line in the sand. Where is this no longer a good-looking setup? I think anywhere under the 50 SMA. 18.5, call it. So the question is, right, in terms of being able to trade for a living. And here's the thing. Here's why this kind of thinking in terms of math, and just thinking in terms of the numbers game, I think this is really important right now because we've been in a market environment where, at least for me, you can take a trade, you can let it go to max loss, you can pretty much just kind of sit around, wait for the fat pitch, and then really get aggressive. And the market is, the market's been ideal for that for the last couple of years. Things this coming year might be a little bit different. Where there's always going to be plenty of trade opportunity. You might not have the same market where everything is just kind of like blindly trading higher endlessly. So you want to think a little bit more in terms of consistency potentially versus, we're always trying to be consistent, but in some market environments you kind of sit back, you wait for the right trade, and you really size into it. Kind of make your year off of 5 or 6 trades. But just in terms of, trading for a living and consistency, you want to focus on a high probability setup. And to me, this has all the criteria. So I got my buy signal, everything else here. But then I want to enter this trade and potentially and ideally lose less than I can make. So if I can make $1,000 here, max profit, and I think a good stop is under 1850, 800. So we take the trade on Monday. By December 31st, if we're down here at 18.5, I'm down $500. If we're down to 18, I'm down about 700 and change. So if we take an exit there, we're working better than a 1-to-1 risk-reward ratio. Say it closes under the 50. Closes under 1850, so which is right near your 50 SMA. You take it off there, say you lose about $500. That's perfect. Because now on your next trade, remember, we're thinking in terms of a 70% win rate here. On the next trade that works if you pocket 1,000, right, you're moving the ball forward. So I'm thinking about doing something similar to this in the mastery and in the options room over here at Simpler. I think we got a good looking chart. I probably look to cut it on a move under 18. Can I lose less if I'm wrong than I would make if I'm right? That's what I'm looking for. And say we can, we've done this in the options room this year. This has been my experience over the last few years. You focus on a good daily squeeze with all of the criteria I focus on. 70% win rate is definitely possible. So now imagine, right, 70% win rate. Every time you're right, you make 1. Every time you're wrong, you lose about half. If you could make that work, you want to take every single trade possible, right? Every good setup that came across your screen, you'd want to take it. Might not work this time, but you know your numbers. And if it's a good setup, you're just trying to work those numbers over and over and, and over again. So we'll talk more about this, this kind of thinking, this kind of management of the trades over the next few weeks, because I do think it's going to be important here. But there's a few good-looking setups for you. Ford, Qualcomm, and then as far as, the Amazons and Googles, I'm waiting for them to set up just a little bit more. But in terms of technology, I mean Apple here. You got your dipperoo to the 21. We took it back here. Got a good push. It was so nice. Maybe we do it twice. But that's what I got for y'all. Total chop fest last week. So is a swing trader, because you can day trade the crap out of this. If you're a swing trader, though, just realize nothing's happening. So if you're bullish and you get all excited on that candle, and if you're bearish, you get all excited on that candle, this is just chop. Nothing's happening here. So focus on structure. In this coming week, we'll see where structure takes us. But we got the biggest catalyst of the year, or the biggest remaining catalyst, potentially of the year. The final Fed meeting out of the way last week. Quarter end rebalancing should have been wrapped up at this point. So now, for the bulls in the market, we'll see if we've been good this year and if Old Man Santa shows up or not. But that's what I got for y'all. Always appreciate you subscribing. We're going to do a giveaway here at 10,000 subs, so tell your friends. But we appreciate you. Talk to you in the next one.